Let's talk to Craig Erlam. He is a senior market analyst for OANDA. Very good morning to you, young Craig.
Morning.
Okay, we have one slide to go through. The Aussie dollar, the Aussie against the US dollar, a nice smooth downtrend. What are your observations around these levels?
Yeah, I mean, I just think this looks like a really nice chart. It's been such a long sell-off. Aussie seems to have suffered from a number of levels, whether it be the dollar strength, which has been prevalent, obviously, throughout the markets, whether it's the fact that it's linked to China, being a major exporter of raw materials. So we've seen this kind of deleveraging or attempted deleveraging in China. We've also seen a slowdown. We've seen China be the target of these tariffs. So naturally, this tends to influence its entire supply chain, and Australia is one of them. And then obviously the commodity play as well, we've seen come as a factor as well. So we've seen this really long-term downtrend. So we've come back towards these kind of 70 levels, and all of a sudden momentum starts to fall out the move. And this is what we're looking for in these kind of moves. Long-term channels, they're nice ones to sell into, but you need to know what the point is when this selling may start to become less aggressive and when people may start taking profits, or even the bulls come in and say, hold on, this is looking a bit cheap now. This was looking a bit of a one-sided, overcrowded trade. So we're looking at the situation right now. You look at the momentum indicators below. The stochastic is making higher lows at a time when price was making lower lows. There's a red flag. The MACD, the moving averages are making higher lows, and the histogram is making higher lows also when price is making lower lows, giving you the same message that the stochastic is. These are red flags. And the fact that we've failed to make a new significant low on the last time around makes it look like we've got a little bit of a mini double bottom forming. All technical plays, really. We're just kind of waiting for the next things to fold out. I'd love to see a move back above those previous highs, through that channel, through the moving averages, and all of a sudden I think we could be looking at a nice little corrective move here.
Okay, so what would the textbooks actually say at this point? Okay, would they say, okay, cover shorts?
From my perspective, if I'm in this market right now and I'm short, I'm trying to work out where I'm covering my shorts, because I'm looking at this thinking I'm a bit anxious about this now. I may have taken some profits along the way. I may be leaving a little bit on the table just in case we do see that dip to the downside. And as we've seen recently, the dollar can still have these runs and the momentum can still shift. But you're looking for all the signals which says this market is no longer short, this market is correcting, this market is overcrowded. So you may have little profits, take profits at certain levels. You're saying this is confirmation of the reversal, this is confirmation of the reversal, or you may just decide that one particular signal is stronger than the rest. So you may decide if this breaks out the channel, there goes the short game, or if this breaks the previous high, there goes the short game. There's so many different ways to play this, and this is the thing about technical analysis. There isn't just one correct response, and ultimately I'm saying all of this market may rotate lower tomorrow, the momentum indicators may pick up, and all of this may be for nothing.
Okay, the old textbooks would say the trend is your friend, don't buck the trend, okay? And it's the most difficult game in the world, isn't it? A, to cover the shorts where you're in a winning position, and part B of that is actually to reverse all engines and go long.
Yeah, exactly. I actually find the reversing all engines and go along to be far more difficult than the cut in the shorts at this stage, because if you've been playing this for a while, then you've probably made a little bit of money. So you're probably just looking for levels where you want to take some profits when you can walk away thinking, I've done quite well here. The hardest thing about going long in these positions, I always find, is not knowing where to trigger the trade. That's easy, right? If it breaks out the channel, that could be one trigger. If it breaks through a high, that could be another trigger. There's so many. If it breaks through the double bottom, that could be a trigger. There's loads of triggers for potential long trades. This isn't obviously me advising people to go long. It's always where you take your profits. Is this a corrective move? Is this a trend reverse? How much of a corrective move is it? Is it going to go back to 74, 75, those previous zone of congestion? Is it going to go back to a 50 fib, a 61.8 fib? These are the far more difficult things to do if you're counter trend trading. So I'd much rather be looking at where to lock in profits right now, obviously, than looking to try and benefit from the corrective move. But then obviously that's part of the game, that's part of the fun, and that could be part of certain people's strategies. And we've seen such a nice downtrend now, then the chances are if we do see a corrective move, I would think that we're probably going to see quite a decent correction in that. And I think when you're looking at these levels, you're looking at around 75. I think that's a perfectly reasonable level. It's around a third of the entire decline, so we're not talking overly significant. You've got the 233-day simple moving averages there, so this is all about mean reversion, and we've seen plenty of occasions when the market, even in this chart here, has reverted to the mean before taking another move. You can look at April, it's done the same. You saw it again back at the start of the year. So we've seen examples of this happening previously, and like I say, it's previous zone of support and resistance. So you're looking at this thing, this could be perfectly logical reversal zone, but again, as everything was trading, this is all guesswork.
On that note, young Craig, thank you very much indeed.
Thank you.